XRP holders, listen carefully, because what just happened could be the most important regulatory moment in XRP history. Ripple partners, institutions, analysts, and ETF watchers everywhere are suddenly paying attention, because the amended 8A filings from multiple XRP ETF issuers have now triggered the official 20-day automatic effectiveness countdown, meaning the clock has started. The timeline is real, and unless the SEC intervenes in an extraordinary way, XRP could enter the ETF era far sooner than anyone expected. And this sudden acceleration is not normal, not random, not accidental. It is coordinated, deliberate, and signals that the infrastructure, the filings, and the legal clarity surrounding XRP have reached a stage where denying the ETF becomes increasingly difficult. And right now the retail crowd still does not understand the magnitude of what is unfolding. Because while the charts show calm, under the surface nothing is calm. Market makers are repositioning, whales are redistributing, institutional trading desks are modeling inflows, custody providers are preparing inventory pathways, and meanwhile the retail community is asking why the price has not moved yet. But this misunderstanding shows how different the institutional world is, because institutions position before the approval, not after, and the 20-day countdown is exactly the moment where that repositioning begins, quietly, steadily, aggressively, and you will not see it until it is already happening. Bloomberg analysts are already saying the countdown resembles the Ethereum ETF pattern, where filings were updated, the 20-day window was triggered, and approval arrived suddenly, not through a loud announcement, but through regulatory silence. Because when the SEC lets the window expire, the ETF becomes automatically effective, and that is exactly what is happening to XRP now. The clock is ticking, the filings are active, the issuers have updated language that only gets updated when launch readiness is near, and the smartest players in the market know exactly what this means. Right now XRP sits at a psychological pivot, not just a price zone, but a structural zone, a moment where narrative, regulation, liquidity, and institutional interest converge, and the market has not priced this in because the market is distracted. Looking at charts, looking at fear indexes, looking at macro noise, while the real catalyst is regulatory, procedural, and mechanical, and when mechanical triggers activate in crypto, they move the market in ways that sentiment cannot predict. Because ETF inflows are not based on emotion, they are based on allocation models, volume requirements, and liquidity ratios that follow systematic schedules. Meaning once the ETFs go live, the buying pressure is not optional, it is structural. And this is why the 20-day clock is a shockwave, because it means XRP could be days away from institutional onboarding at a scale it has never seen before, not through speculation, not through hype, not through YouTube predictions, but through regulated, compliant, SEC-approved, Wall Street-funded vehicles designed specifically to aggregate demand and move capital into the asset systematically, automatically, and continuously, and that is why analysts are calling this one of the biggest turning points in the history of the XRP ecosystem. Meanwhile, Ripple's recent ecosystem expansions, new liquidity corridors, new institutional integrations, and the massive steps toward global settlement architecture all create a backdrop that amplifies the ETF narrative, because ETFs unlock demand. Demand requires liquidity, liquidity requires infrastructure, and Ripple has spent years building that infrastructure, meaning the timing is not accidental, it is synchronized, aligned, and indicative of a step function event approaching. So what happens next? What does this countdown actually mean for XRP holders? It means that the era of guessing, hoping, and waiting is being replaced with a scheduled regulatory process, a process that leads directly toward ETF activation unless stopped, and the SEC stopping it becomes more and more unlikely as more filings update, more issuers join, and the precedent set by Bitcoin and Ethereum continues to harden regulatory pathways for other digital assets with similar profiles. Meaning XRP is not moving into unknown territory, it is moving into territory that has already been cleared by larger assets, and this removes a massive layer of risk from the equation. Whale wallets have already begun repositioning. Several of the largest wallets show accumulation patterns forming precisely during the countdown window. OTC activity increases, exchange liquidity tightens, and long-term holders continue pulling supply off exchanges, all signs of pre-ETF positioning, the same signals that appeared in Bitcoin and Ethereum before their ETF launches. And every time this pattern appears, it ends the same way. Supply gets absorbed, inflows surge, volatility spikes upward, and price discovery begins a new phase. So the question is no longer whether XRP will move. The question is when the ignition event will occur, because countdowns do not last forever, clocks reach zero, and when they do, the market reacts not gradually, but violently, suddenly, explosively, and XRP sits at the center of that developing storm, with one of the most dramatic risk-reward setups forming beneath the surface. And when the day 20 window closes, retail will realize too late that the quiet phase was the opportunity phase, the phase where the smart money acted while everyone else hesitated. This is the moment XRP holders need to understand, because everything is aligning at the same time: legal clarity, institutional pathways, regulatory filings, liquidity readiness, narrative shift, global demand for faster settlement, and now the ETF countdown itself, all converging to create a scenario that has only one direction once the trigger activates. And that direction is liquidity expansion, inflow pressure, and upward volatility that can reshape the entire chart structure within days. Not months. The countdown is active, the filings are live, the window is open, and the market is still asleep, but you are not. You are here, watching this unfold in real time, and the question now is simple: are you prepared for what happens when the clock hits zero? And as the 20-day clock continues ticking downward, the market remains strangely silent. Retail traders scroll past the headlines without realizing what this countdown really means. Institutions stay quiet but move strategically. Issuers finalize back-end structures. Liquidity desks prepare inventory. Market makers reduce sell pressure, and all of it happens in the shadows, without fanfare, without hype, without a single loud announcement. Because real money does not need noise, real money needs timing, and the timing is now measured in days, not months. Every hour that passes brings XRP closer to a regulatory milestone that could reshape its future forever. Every filing update signals readiness, every liquidity shift reveals positioning, and still the price looks calm, almost intentionally calm, as if someone is trying to keep the chart asleep while the infrastructure awakens beneath it. But charts do not move first, filings move first, institutions move first. Liquidity moves first, and then price reacts like a slingshot pulled back for weeks waiting for release. If the SEC stays silent, the ETFs go live automatically. If they go live, inflows begin instantly. If inflows begin, supply tightens aggressively, and if supply tightens in an asset already structurally constrained, the reaction is not slow, not gentle, not predictable. It is explosive, vertical, unstoppable, the kind of move that turns disbelief into panic buying and panic buying into momentum. And that is why this countdown matters more than anything else happening in the market right now. Because this is not speculation, this is not rumor, this is not guesswork, this is a legally defined timeline, a regulatory trigger, a mechanical countdown that ends in a binary moment, and when the clock hits zero, the entire XRP market will be forced to wake up to a new reality, a reality where institutions finally gain regulated access to XRP at scale, and once the door opens, it does not close again. This is why the quiet phase is the most dangerous phase to ignore, because history shows the biggest moves always begin in silence, always begin in doubt, always begin in the countdown.